Hello and welcome to today's daily education here at Forex.Academy. My name is Robert Blackwell and I have the pleasure today to walk you through today's daily educational video. Before we do so, please consult the following disclaimer. There is, of course, always inherent risk when trading the financial markets. And so for the topic of conversation for today's daily educational video, we will be discussing trading US equities. I would like to note, guys, when we're considering trading US equity indices, is that we are in a very strong bull run. That means that the economy is strong in the US. And of course, the price action is leading us to believe that we're going to see continued growth across the US equity sector. So first thing I would like to do is open up the JFX platform I have on screen here. I'm going to close my market watch because I have a couple of US equities here on screen. Of course, I have the S&P weekly price action and the NASDAQ. I'm going to add just in place of the UK FTSE 100, the US Dow Jones Industrial Average, okay? And I'll close my market watch. And we'll just pay quick attention to these three markets in front. The S&P 500, that's the largest equity index in the US by market capitalization. The NASDAQ 100, which is the US tech-heavy stock index, of course, your Facebooks, Microsoft, Qualcomm's, Cisco Systems, Netflix, all of these type companies. Then you're focused more on construction, manufacturing, and industrial production there in terms of the makeup of the US Dow Jones Industrial Average, 30 companies within. So we're looking at the weekly price action. And again, if I can just consult daily price action of all of these markets, I want to show you the bull run that we're currently experiencing, okay? We'll start with the S&P and I'll zoom way out on the price action, guys, for both charts. So this is the S&P, first of all. What does this show us in terms of the level of strength with the US economy at the moment? So we have 500 large cap companies, 500 companies in the S&P 500. And of course, what we can see here is that we have a very strong bull run leading from 2017 the whole way up to current price action today, which is right here. Okay, so as you can see, we had experienced a lot of volatility there with a large equity sell-off there in February. You're going to see this across the different US and global stock markets as a result, because they are all correlated. More particularly, of course, these three equities that we're going to look at today are very, very correlated. And you can see that in terms of the equity bull run that we are experiencing in the US and across global markets here as well. So there is the S&P 500, NASDAQ 100, and the Dow Jones Industrial Average here. Okay, so let's start with the S&P 500. Again, you can see if I zoom out way on the price action, the large extent of the bull run we are currently experiencing. Let's zoom in to observe the recent price action, because you'll see that in the shorter term correlations do break down, okay? So one thing I'd like to note, guys, on a technical level, we have the sell-off here, and then we have these lows. Now you're going to experience these lows in all of these three markets. But again, as the correlation and volatility comes into the markets, they'll begin to break down in terms of their correspondence of trading local price action and in the short term. So here we have another set of lows here, another set of lows here, and then we're just on these lows here, slightly higher. So that is significant from lows. On a technical basis, guys, we have 1, 2, 3 higher sets of moving lows in this market, and that would suggest to us, just on a purely technical level, we are in a bull run. That, well, markets, they don't trade in a linear fashion, i.e. in a straight line, and this price direction today is telling us that we're looking to see some continuation in these markets. Now, I did say that in the shorter term these correlations break down, so I want to show you that. So just bear for a moment this, albeit zigzag bullish run in the S&P 500, and we'll look towards the equity markets here with particular attention to, we'll choose the Dow Jones Industrial Average because it's important at the moment. So I said we have these series of higher lows here, okay, just slightly higher. And again, is there a difference between the S&P 500 equity market in the US and perhaps the US industrial average? Of course, that is the case. Okay, so you can see, guys, there is some fundamental news coming into the market at this time where the trade war rhetoric with the US and its largest trading partners, China and the Eurozone, of course, is causing some concern for markets, particularly those markets of as I said, construction and production origin. So a lot of these companies are heavily invested in manufacturing. Of course, if there is a tariff on steel production or steel importation into the US, of course, there's going to be a cost effect pass on to many of these companies. So you can see, guys, the weakness in these markets, according to the fundamental news flow with trade war functions, is of course affecting the US Dow Jones Industrial Average much more than other markets. Okay, and you can see that the lower low here is effectively the difference from the S&P, where the S&P is roughly around these prices here. Okay, so this is the weaker market at the moment. The correlation has broken down. As a result, the news is affecting one asset, one equity index in the US more than another. Now we'll look at the NASDAQ 100 in terms of assessing this news. And again, it is outperforming in 2017. It has outperformed, and it is, of course, seeing much more of a constructive bullish trend to the upside, almost trading within a price channel here to the upside. You can see it has had a bit of a sell-off, a strong sell-off recently. We have no real secular lows here. We have these lows with consolidation, but again, we have much more of a higher lift in this market as it starts to continue to the upside. So there is discussion that this market is really one of the main driving forces behind growth in the US, as investors see a lot of value in companies like Facebook. Amazon is, of course, one of the largest companies in the world by market capitalization and total value. Okay, so a lot of value in these companies, and again, the level of business they're doing is creating output or contributing to the gross domestic product for the US economy, and of course employment, wage growth, all of these things do play a factor. So we're seeing a very strong correlation in the US equities in the short term, albeit have broke down with the US Dow Jones Industrial Average. So I just wanted to go through these correlations with you. You can of course pick trades as a result. So let's say we believe the story is starting to unwind with the trade rhetoric, and we get some positive news, or the markets start to price in the fear of this news, but then effectively it's been priced in, you could say, too much, and it's not going to affect the asset over the long run as much as expected. This market actually show some outperformance then, if that is the case, relative to the S&P and the NASDAQ given its sell-off. So again, always understand the correlations and profit opportunities that exist in understanding the main basis of these three correlations between the US S&P 500, Dow Jones Industrial Average, and the NASDAQ 100. So that brings us to the end of today's daily educational video here at Forex Academy. Thank you very much for joining us. We look forward to seeing you soon. Bye for now.